Hello students, I am Professor Hardik Majitia and today we will cover the introduction to venture capital and its features. This video is specially for TY students and TY students. So let's begin with the introduction to venture capital and its features. Introduction to financing to venture capital. In the early 1970s, a need was felt to find out innovative way of funding business. The government of India appointed a committee under late Shri R.S. Bhatt. The committee is recommended the starting up of venture capital in India. Venture capital, which is known as seed capital, is a system of risk capital. In other words, capital that is invested in a business project where there is a substantial element of risk relating to the future creation of profits and cash flow. Venture capital is financed in the form of equity shares rather than the loan and the investors require higher rate of return to compensate his risk. Now, definition of venture capital. According to Dominguez, venture capital financing is generally the first capital invested by sources outside of the firm and the last to exit. In the parlance of the market, it is the front money or fund that normally sub-oriented to all other financial commitment of the enterprise. Aside from common stock financing, the most common form of alternative equity instruments issued in venture capital investments are convertible debentures, warrants, and later stock options. In short, venture capital is the first and venture capital is a capital which is financing in the early stage of any business or a startup capital we can say. Okay, so moving forward, the features of venture capital. So venture capital is a real financing. So from this word only, real financing word only, we will discuss the features of venture capital. The main features of venture capital can be summarized as follows. First is R. R stands for risky capital. Venture capital, which is also known as seed capital, it is generally the first financial investment in a project which is highly risky. All venture capitalists face the risk while investing in project only the degree of risk may vary. The risk component of venture capital is remunerated with the high rate of return to the capitalist. And as it is rightly said, high risk, high return. Second is E. E stands for equity participation. Now, venture capitalists give the capital to the early stage businesses. But what they are expecting? They are expecting in equity in form in relate to their capital. So, venture capital has distinguished features as compared to debt or any kind of loan raised from the lender. In the in this case, the venture capital returns solely depend on the growth and the profitability of the business earned, which is paid during exit by selling its shareholding to another. Basically, its objective is to make a capital gain by selling the shares once the firm becomes profitable. Third is A. A stands for active participation in management. Now, if venture capitalist taking equity from the business, it means it is also the owner of the business. So, owner of the business are always actively participation in a management. So, apart from providing capital, venture capitalist is also participate actively in the working of the management. They provide managerial skills and expert services to the project wherever it is required. It has been rightly said, capital combines the qualities of bankers, stock market investors, and entrepreneur in one. Next, L stands for long-term investment. Venture capital financing is a bridge capital till the time business get listed and issue quoted stocks. It is a long-term investment made in the companies that have high growth potential. They prefer to stay in the business till the period of 2 years to 5 years. It is more than 5 years as well if they feel that company is more or high growth potential. Otherwise, they will sell out their equity shares and take exit from the company. And last is financing in a new business. Venture capitalists choose to capitalize an entrepreneurial business which may be small or a new one. The following are the characteristics evaluated by the capitalist before investing, that is, goal of the business, the potential of growth, size of the business, the turnover rate within 5 years, and ambitious things. So, these are the features of venture capitalism. If you like the video, then you please like, comment, and subscribe for more videos. Thank you.